And I'm going to. All right, welcome everyone. The best thing is, since we're just starting here, please let me know in the chat if you can or can't hear us, and just so we're all on the same page here. Make sure everything's working. You guys can see the screen and all that while we let the rest file in here. We're right at 7 o'clock, so we're gonna let a few people file in first, but yeah, definitely let us know. Introduce yourselves, use the chat as much as you can. That's going to be the biggest thing here going forward. Looks like we're gonna have a good turnout on this one as well. Also, happy first day of summer. I know it doesn't really feel like it out there, but summer's finally here, and hopefully you guys are getting some good outside time. We got so far about 13, yeah. So I'm gonna put this in the chat just so everybody has it. Well, first I'll say hi. Make sure that's working. I'm also going to put this in here. You're going to see this quite often throughout this this presentation of ours, but this is a booking link. So if there's ever anything that we're not covering or you need more questions on or want to know more on something or want to get the process started, that is the booking link. It takes to a page that you can book a call, a one-on-one call with us at your available time and available time for us. So it's a great way to go from there. But for this whole thing, this chat box is going to be an amazing thing. Just as I have a lot of stuff I need to run through here. So if you guys have any questions on anything while we're going through it, definitely put all your questions in there. We'll try to get to them as we go. Ryan is going to be monitoring that as we go. But at the very end of this, we're going to hang out and do a Q&A session at the very end, and you guys can stick around if you want and fire off questions at us. We are happy to answer everything here. So we're going to give it another minute or two here. We're going to let a couple more people file in here. As well, the other thing I want to mention is this is recorded. So if you have to leave for whatever reason or miss something, this is recorded. I am going to send a link out to it in another probably a day or two. And then you guys just watch your email, your inboxes, or sometimes your spam folder for that. If you don't see it by Friday evening, definitely reach back out to me on that number that was messaging you and let us know you don't see it. That way you guys can watch it whenever you want. I can get you the direct link for that. So yeah, we got a lot of stuff we're going to go through. Hopefully it's going to help out a lot for everybody. That's the whole goal of this. But yeah, and then we'll get you guys out of here. It usually takes about an hour to run through this as much as we can. And then we'll stick around for, 15-20 minutes afterwards for answering all these questions, and you guys can get out and enjoy your evening. So we're we got about 20 some so far. So I think it's safe to say we can, we'll get moving with this, because like I said, there's a lot to cover here. So don't worry, throw your questions in the chat. We'll get to them as we go. There is going to be a lot here. So when you guys signed up for this, again, thank you guys for taking time out of your evening to be a part of this with us. We're always excited to do these. It's a lot of great information here. So the first message that you guys got when you signed up did mention that you're going to get a copy of my book, and that's exactly right. So you guys are going to get in the same email with the recording, you're going to get a free copy of the complete guide to buying a home book that I've developed over the last year. It's going to be in a digital copy. That way you guys can read it on your phones, your tablets, your e-readers, whatever. It's chock full of some great information on buying a home and things to look out for. Plus, I'm also going to give you a condensed buyer's guide, which is just a couple pages of the main stuff to look for when buying a home, especially what Ryan and myself can do for you guys. That's all going to come to you for free in your inbox at the same time that I'm going to send that recording link out. So again, thank you everybody for that. Just keep an eye out for that. So a little bit here to start. For the majority of us, buying a home is going to be probably the most expensive purchase in your life. It is a fantastic investment. I bought my first home back in 2015. I'm on my second home now. It is a great investment to have. It's a place I call home. It's comfortable. I do what I want with it. And it's really great to build that equity in it. And this is one of the best things you guys can purchase. But when you've never bought before or don't know how it works, if you're new to Canada or just new to the whole buying process, it is quite overwhelming. So the thing that Ryan and I strive to do is to make this as comfortable as possible. But if you guys are feeling any of these, if you're concerned and stressed about it, especially what you hear in the media and stuff, we understand, we totally get it. And our job here is to either at the end of this presentation is to alleviate most of those. And if not, definitely book a call with us. And we'll do what we can to answer and try to help you out with that. And pretty much our main goal is to pretty much walk you through the whole buying process side by side so you know exactly what's going on. So we're going to get into this, but before we do, I want to introduce us and who exactly it is you guys are talking with. So first off, I am Andy Goddard. I'm a realtor here in Saskatoon. I started with Royal LePage back in 2021, and I've since switched to EXP back in January last year. I've helped many buyers and sellers upgrade, downgrade, transition into new homes, move out of province, right? Many satisfied buyers and sellers that I've helped over the last couple of years. I am licensed in all of Saskatchewan, so I can go pretty much anywhere, but my main hub is Saskatoon and surrounding areas. I do live out here in Warman with my wife, my son, my daughter, and our dog. We've been out here since 2016. We moved out here. I have a ton of family in the area, so it's really great to be in this amazing area, and I like helping people find this area as either their forever place or a great place to start out with. I am going to put in the chat here. It is a Linktree account, which basically has all my social media, so all my personal and my business ones, so you can see and check out everything, see who I am and what I'm about. And I'm going to be the one that's pretty much speaking for the majority of this, so you get to enjoy seeing that most of this presentation. But anyways, that's a bit about me. Again, I'm a realtor here in Saskatoon. That's pretty much what I service around this area. But when it comes to real estate and buying a home, the main thing is you're going to need, pretty much, unless you have the cash to buy a home, you're going to need mortgage approval. And without a mortgage broker and a realtor, it just doesn't really work that well together. So I have teamed up with a fantastic mortgage broker who we've helped many, many first-time home buyers out. And I'm going to let Ryan introduce who he is.
Well, good evening, everybody. Yeah, I am definitely the yin to Andy's yang, and we work very well as a team. And what we really try and put forward is that team dynamic. We're going to be able to help you all the way through the process, through the financing end of it, and all the way through finding that perfect home, all the way through to the close of that home. So I am Ryan McEwen. I work with TMG, the mortgage group here. As Andy mentioned, we are Saskatoon based, but we do cover all of the province of Saskatchewan as well. So if you if you want to buy just outside of Saskatoon or in Regina or in another area as well, we can help you all the way through that process all over the province. I've been in the mortgage industry for over 20 years now. It's actually almost 24. I am working with TMG. And TMG, the mortgage group, is actually the largest brokerage here in Saskatchewan, and I'm proud to be a big part of that. I do live in Saskatoon. I'm Saskatoon born and raised. I live with my wonderful wife, Michelle, and my two boys, and we have been married for 28 wonderful years, so a long time. It probably dates me a little bit, but but yeah, know that you are in great hands all the way through the process, with me handling all the financing side and Andy helping you all the way through that absolutely wonderful home buying process. We got you covered end to end. So Andy's going to be putting the booking links all over that chat function. So what we really want to do is really make that link, make that connection with you early, start that process, and be able to talk to you one-on-one. So we're really looking forward to that. When you do see that booking link coming up on that screen, feel free to click it and get an appointment set up. But I'll turn it back over to Andy, get the process started. Thanks so much, guys.
Awesome. Thanks, Ryan. Yeah, that's who we are. It's been a great dynamic between Ryan and myself to helping people find their homes. It's just the communication for anything, but especially buying a home, communication's key. And that's what's great about Ryan and myself is we're always in constant communication with each other. So what I'm going to do now that you know who's speaking with you and who's going to be helping you out, Ryan's going to be monitoring that chat box. Throw all the questions out there because there's usually always going to be a lot. Don't worry, throw them all out there. We're going to try and answer them as we go along, but we do have to move through this as a steady pace. So there will be a point at the end of this that we'll look back and see if there's anything we missed. So feel free to throw them all out there. So what I'm going to do right now that we got the introductions out, I'm gonna do just the basic outline of what to look for when buying your first home. Now, this slide alone, I could probably go on for hours, but we don't have that much time. So this is gonna be a very condensed version and try to show you kind of what the process looks like. So whenever somebody comes to me and tells me they're tired of renting, or the most common one lately is my rent's been going up again. I don't want to deal with this anymore. I want to find my own place. What do I do? I always tell them, learn everything you can about the home buying process. Again, that's what Ryan and I are here for, is to provide that for you guys as much as we can. But once you kind of get that idea, the first step is to definitely get a pre-approval. That's going to be the biggest thing, because that's going to tell us how much you can afford, and it dictates what and where we can look for a home for you. So then we kind of speak with Ryan. Ryan will go over financials with you, kind of get an idea of where you're at and see how much we can get you approved for. Once we have that fantastic number of approval, know how much we can shop with, we meet back up and we kind of discuss what kind of a home are you looking for, right? Do you need a standalone detached home with a garage and a yard? Are you looking for more of a semi-detached home, better bang for your buck kind of thing? Do you want a townhouse condo or an apartment style condo? Whatever needs you need for your family or for you, we're going to figure that out. And then we're going to jump on the MLS and look around and start looking at places. Chances are you're going to get a whole list of places coming at you. And then as every new one comes on the market, you have a look at those and you see ones you like. We book that showing and we go check them out. Now, that's the biggest thing. I've ran into it lots lately, where people are seeing pictures of the houses and they're just not, happy with them. They're maybe, they're not seeing anything that's a good fit. But one thing I always recommend, especially if you've never done it before, is actually physically get into some of these houses, right? Find one that you think might be okay. Let's go check it out and see. Because once you physically get into the home, that's a whole different thing, right? You can see how much of a fit's going to be, see how well it's taken care of or not taken care of, right? Because we do hire professional photographers to take pictures of the interior of the houses, and that's to entice people to come into them. But sometimes they don't just paint the big picture, right? So physically looking at them gives you a way better idea of what they are and what they're like, okay, and how good of a fit for it. So that's a huge thing to this. But once we have a look at it, find that house that's a perfect fit for you or you and your family, we sit down and we figure out what the best offer is going to be. Now, with this red hot market going on right now, there's a lot of offers being thrown on places, sometimes multiple offers. So we need to figure out the best competitive offer we can make, right? And I'm not always saying go higher than the next person. I'm trying to figure out the best possession dates and the right amount. We don't want you to throw all your money at it if you don't need to or want to, right? It has to be the perfect house for that. But we need to do a competitive offer, and that's where we'll sit down and kind of figure that out and figure what the best option is going forward. We win that offer, we get it accepted, we go into what's called the condition period. And that usually gives Ryan time to finalize the financing. So you are pre-approved. Now that he knows how much you need to borrow, he can go ahead and finalize that for you. So it's going to get about a week and a half minimum to get that finalized for you. Gives us time to get a home inspection done. Right now, home inspectors are booked up like crazy, so we need that extra time just to get them in there. And if you're buying a condo, we need time for a lawyer to review that condo package, all right? So that's what the 2 weeks are for. It's a condition period. So if any of those conditions aren't met, whether it's the financing, a home inspection, condo certificate, whatever, we can walk away and go find something else. But once everything's satisfied, you're happy with all of those, the financing's good, home inspection's good, condo review documents good, we lift conditions and it becomes a firm sale. And now we're just waiting for possession date. So during that time of waiting, depending if it's a vacant house or an owner occupied house or a tenant in there, depending on when your possession date is, you would meet up with a lawyer probably about at minimum or a maximum a week before possession date to sign the documents. So the mortgage transfer will come in, title transfer, things like that. You'll sign and finalize everything with a lawyer. And then on possession date, I'm going to get a message from the other agent saying keys are released. I go pick up the keys and I'll meet you at your new home. We do a walkthrough to make sure everything in the house is the same as it was when we looked at it previously, and make sure everything's working properly for you. Once that's all good and you're happy and satisfied, keys are yours and you are now the proud owner of your first home. Again, that's everything. Like that's there's so much that goes into it, but that's just the condensed version of it. So again, if anybody's got questions on any of it, definitely throw them in the chat or wait till the end or book that call with us and we can go over it a lot more. But that is just kind of the basics of what it looks like when you buy your first home. Again, lots goes into it. Ryan and myself, the whole point of this is to make sure that everything that's in that list goes smoothly as possible and you don't really have to worry about a whole lot. That's the goal here. So the first couple things I'm going to get into now that you know kind of the process of what it takes to buy a house, we're going to kind of get into the big thing, which is mortgage approval, right? That's always the biggest thing, is how do I get mortgage approval? What does it take? What programs are out there to help? And we're going to cover all that. So again, as we go through this, throw all those questions out there. Ryan will be here to answer all the financial questions and we can kind of go from there. So I want to ask you guys one thing here. Has anybody ever heard of the first time home buyers incentive? Throw it out in the chat. Let me know if anybody's heard of this. And if anybody knows what it actually is and how it can help you. All right, perfect. So some have, yeah. Yeah, and so there's a lot of misconceptions with this sometimes. What Ryan and I do say a lot is if you don't need to use this, don't. But it is beneficial. We have had people use it to help them out, and I'll explain why it's great. I'm not sure about the 8K per year thing. That might be something I haven't heard of, but this is a little different than that. So I'll let you guys know. I'll explain how you qualify for it, what's needed, and what the benefits are to it. Again, if you don't need to use it, don't use it. But it is there to help, right? That's the whole point of it. So far, this is a bit of an older number now. I think this is from 2019, but they've used about $1.25 billion worth to help make home ownership more affordable for Canadians. So what is it? It's basically a shared equity mortgage. So the government of Canada is going to help you with a down payment, right? They're going to give you an additional 5% of a down payment. In order to buy a house in Canada, the minimum down payment you need to provide on your own is 5%. They're essentially going to double your down payment. Now, it's a shared investment into your home. So it's both to share in both the upside and the downside of the house value. It's not interest bearing, so it's not going to tack on interest. There's no regular payments to make on this at all, and it's repayable at any time without a payout penalty. All right, so I'll explain why and how this all works too, but essentially they're going to help you out with a down payment. So who can qualify for this? Anybody that's a Canadian citizen or a permanent resident can qualify for this. Even I know there was a bit of a thing going on there where they denied anybody that's not a permanent resident or Canadian citizen from buying property, but they've kind of revamped it again. If you're here on a work visa, and as long as you have, I believe, Ryan can correct me if I'm wrong, I believe it's about 180 days minimum left on it, you can also qualify for this too. Anything less than 180 days, you're too far into it and you're going to have to just get your permanent residency status. But as long as you got a minimum 180 days left on it, you can qualify as well. At least one person purchasing the home. So if you're going in with your spouse or a family member, as long as one of you hasn't owned a property before, you can use this. If you are going in with a family member or a spouse, as long as your annual income doesn't exceed $120,000 a year, you can use it. If you exceed that amount, the government feels you don't need their help, which is fair. And the combined insured mortgage and incentive amount cannot exceed 4 times your qualified annual income. So there is a cap to how much you can get approved for with this program. So if you make $100,000 a year, you can't buy a property more than $400,000. Okay, just there is that cap to it. And also the maximum down payment, including the amount they give you, can exceed 19.9%. So what happens is anything under 20% of a down payment, you do have to pay mortgage insurance premiums on. So this program is not going to help you get over that. So if you have 15% down and still want to use this program, they're not going to give you another 5%. They're going to only give you 4.9. Just it will not help you. Okay, so but I'll explain again why this is a good program. Just on a side note, besides this incentive, there is another first-time home buyers program to help you with your down payment, and it's using the RRSP. So if anybody has RRSP saved up, you can withdraw up to $35,000 per person to use towards a down payment, and you can also use the incentive with that as well. These programs aren't exclusive. They both define first-time home buyers the same way. You can use them at the same time. Now, Ryan and I do recommend that if you are going to use your RSPs, please reach out to your service provider and make sure they know that you're going to do that and that you're able to. We have had We had a couple of people that were buying a house with us, and they said they're going to use their RSPs, all was good. And then as we got the deal going, we found out after that their RSP provider, it was the wrong RSPs, it was a locked in one, and they weren't allowed to use that as a down payment. Ended up crashing the deal, and they kind of had to start over with their down payment. So we want to just make sure it doesn't come to that and just reach out to them. The only difference between the RSPs and the incentive is that you have to start paying back your RSPs within 2 years of using them. So once a 2-year mark hits of you using them, you got to start paying it back, but you can do it in installments and chunks as you want. You don't have to pay it all back at once, but you just have to start paying it back eventually within the first 2 years. Okay, that's the only difference with that. So back to the incentive. When can you pay them back their money they gave you? So the 3 times you can pay it back is either when you decide to sell the home. So let's say you lived in it for 5 to 10 years or whatever, and you decide you want to sell it and upgrade or downgrade or whatever you want to do. When the proceeds of the sale of the home, you'll use that to pay them their amount back, and then the rest is yours. Or let's say you, anytime during the first 25 years of your mortgage, you can either pay them back by your own savings, or you can refinance your mortgage to add that in there. The third and final way is if you pay off your mortgage all the way to the end, let's say you go all the way through the 25 years, you pay it all off, you either can pay it off using your own savings again, or you can take out a small equity loan on your home and use that because you've built nothing but equity in your home now. It's paid off, you've got equity all over the place, so you can just take out a small equity loan on that and pay them off that way. So those are the ways. Again, it has to be one lump sum, and I will explain why it has to be in one lump sum and not payments. So here's an example. So they're going to give you that 5% based on the purchase price of the home. I use 400,000 because it's easy math. 5% of 400,000 is $20,000. So they're going to give you $20,000 because you bought a house at 400,000. Now, if your house value rises to 500,000, you have to pay them back the 5% of the value of your home at the time you're paying it back. So if you decide, okay, I want to pay them their money back, I need to know what my home is valued at, you have to pay them off at 5% of what your home value is at that time. That's why you can't pay them back in installments. They need to know the value of your home because they are investing their money into your home value. As your home value grows, so does their investment. Now, if you think about it though, your house grows to $500,000 and you paid $400,000 for it, you've now just gained $100,000 in equity in that home, and you only have to pay them $5,000 extra of their $20,000, right? It's quite a large amount that you're getting on equity, and they're not making a whole lot off of it, right? They are investing in you, but it's not a dramatic change, right? Like even if it grew to 420,000, that's 21,000 kind of thing, right? It's a small amount compared to the amount of equity you're building your house. Now, the flip side of it is if your house value falls below what you bought it for, you pay them back again the 5% based on what your current value is. So if it's less, you pay them back less, right? Again, that's an investment works. They're going to risk their investment as well. Okay, so just some things to think about. That's exactly why you can't pay it in installments, is because it needs to be paid off the 5% the value of your home at the current time. Okay. So then now there could be questions of how is this beneficial? So this is where I'm going to explain there's 2 ways on how this is beneficial for people if they want to use it. Again, if you need to use it, it's here. If you don't, even better. But the first way that it's beneficial is, let's say you bought a new home, it's at $400,000. You gave the minimum down payment of 5%, which is $20,000. So you're going to have to borrow $380,000 from the bank. That's the bare minimum. Now the mortgage incentive, sorry, the down payment incentive is going to come in, and they're going to double your down payment, which essentially goes from 20,000 to 40,000. So now you're borrowing less money from the bank. So you only have to borrow 360 instead of 380. So there's the first thing, is that it's going to give you less monthly payments at the start. Okay, that's helpful. And when I also said that anything under 20%, you have to pay insurance premiums on. Well, since 5% is the minimum you need, the insurance premiums are at the highest point. At 10% down, it goes quite a bit less. At 15% down, it goes even more or less. And then at 20%, you don't have to pay them at all. Again, this program is going to help you get over that 20%. But if they're going to give you more of a down payment, it's going to make you borrow less from the bank, and your insurance premiums are going to be down. So again, it's going to be less monthly payments. That's the one benefit. Now, the second benefit to this, which is one of the more common benefits we find with it, is let's say that you are able to be approved for a $400,000 home. However, your down payment isn't quite there. Let's say you only have $10,000 saved up instead of the $20,000. Well, 10,000 is good for a $200,000 home. This program, again, they'll give you an extra, they'll essentially double your down payment. So you have 10,000, they're going to give you another 10,000, which gives you 20,000, which has now pushed you from a $200,000 home to a $400,000 home. So essentially, it's giving you the down payment to increase the amount of home that you can purchase. So I know it's a lot to take in, but those are the two ways: less monthly payments off the start, or pushes your down payment up higher to boost you up into a higher level of home. And that's usually the one we see the most of, is just to give them a little extra money because they just don't have quite the savings there to get them into the house that they can be approved for. Okay, so it is a lot to go into that. I see there's some questions running. Ryan's going to keep firing those off. There's a lot that goes with this. Again, if you don't need it, don't use it, but it is a program that is available to anybody that does need it, and definitely is helpful down in the long run. Okay, so again, keep throwing questions out there. Ryan's going to keep rocking it. I got to keep moving forward just to keep up with time here. So the second mistake here is not getting a pre-approval. Now, with the way this market is, and it's so red hot and homes are moving so fast, it's really almost impossible to search for a house without a pre-approval. First off, we don't know how much it is and how much you can buy. And second is, if we do look at a house for whatever reason, and then we go to see if you can get approved after that, there's no time to get that done without that house being gone. Because basically a lot of houses will go up on the market, and within that day or two, they're already got an offer on it and it's gone. So it's just, let's eliminate any of that and just get a pre-approval right away. Plus, at least it gives you an idea also of how much you can afford, because there's nothing worse than looking at a $500,000 house and finding out you can only be qualified for $400,000 or $450,000, because dropping $100,000 off a house is quite drastic, and we just want to eliminate that altogether and find out your maximum amount. So there's three things that go into a mortgage approval, and all three of these have to work together to get you a pre-approval. So the first thing they're going to look at is your credit. They want to see what your credit score is. So anywhere from 620 to 650 is a good starting point. They want to see how well you do with payments. Are you making payments on time? Are you missing payments? Do you have a bunch of debt racked up, a bunch of loans, a bunch of lines of credit, things like that? They want to make sure that you can pay off the money they're going to give you, right? The second thing is they're going to look at income. Now they're going to want to see about 2 years worth of tax returns to see how much you're making. However, if you are on a salary position, all you would need is a letter from your employer stating what your salary is and the pay stubs to back that up, to see that you're guaranteed hours and see that you're the amount of money that you're making. They can just use that as well. For anybody that's new to Canada that doesn't have a 2-year history, don't worry. Ryan is going to talk about the New to Canada program. It's a fantastic program. We've used it a lot. It's very, very beneficial. So Ryan's going to cover that. But that's kind of just the basics. Is they're going to look at your credit and your income, kind of figure out where you're at with it. And then, of course, the down payment is always a bigger one too, is you need to know how much your down payment is and where it's come from and the source and all that stuff. Because again, you could be qualified for $400,000 or $500,000 home, but your down payment could restrict what you can buy just based on how much you have saved up. Now, there is 3 to 4 ways you can get a down payment. So the first 3 are the main ones. So one is your own savings, which is always the most common one. Number 2 is using that RSP program I mentioned earlier. And the third one is what we like to call a gift from the bank of mom and dad. Now, you can borrow as a gift, I should say. I shouldn't say borrow, but you can get the down payment gifted by an immediate family member. So your parents, grandparents, right? Anybody that's an immediate family member can gift you that as a down payment. They'll just have to write a letter saying that it's a gift for you. Now, little disclaimer here. If anybody is thinking about, asking for money for a down payment as a gift, that's an okay option, but please run it by Ryan and tell him what you're doing and who you're getting it from. Because we have run into this issue a couple times lately where people say they're going to get it from a gift from a family member, but it turns out it was like a cousin of a cousin or a friend, a best friend, or an ex-wife's cousin kind of thing, right? And it just doesn't work that way. All right. So we could have saved a lot of headache by just explaining the process better and how you can go about this, instead of just getting the money and saying, here it is, and finding out it's not how to do it. You got to wait 90 days before we can use those funds. Okay. So You can get the money gifted to you for a down payment. You just need to make sure you talk with Ryan and exactly figure out where it's coming from and the best way to do that so we're not wasting time, right? And then the fourth and final way is more inclusive. So if anybody on here is part of the Métis Society of Saskatchewan, the Métis Society is giving away up to $15,000 for a down payment. All it needs to be is you need to be a first-time home buyer and being able to be approved for a mortgage using their down payment, and you can qualify for that. So if anybody here wants to know more about it, definitely reach out to me. I can get you the email documents on that and who to contact to talk more to about that at the Métis Society. So those are the three main things about mortgage approval. The nice thing is they're underwritten, so they're going to be it's going to be very reliable. So they're going to review your income, they're going to review your credit and your down payment source. All right, but again, reliable, and it tells you the exact maximum amount, and that's the number we need. We need to know how much range we can shop for, and that even when we're putting offers in, we have that exact number. So if we're looking for a house that's, let's say, 380 and there's multiple offers, we need to know if we can push up a little bit, right? So if you're approved for 400, at least we know that maximum amount that we can work with. All right, that's such a huge thing. All right, so those are the three major things with the mortgage approval process. I'm going to pass it back off to Ryan for a bit, and he's going to let you guys know about the New to Canada program, which is a really, really awesome program. So I'm going to let Ryan take this away.
Perfect. Thanks, Andy. And great introductions of a few fantastic programs. The first time home buyers incentive was developed by the Canadian government a few years back. And it really merges well with the New to Canada program. I'll talk a little bit about really why this is probably one of the more beneficial uses of the first-time homebuyer incentive is to have it paired with the New to Canada program. So the New to Canada program is for people that have immigrated to Canada within the last 5 years that do have a limited Canadian credit history. So we know that if you're coming here from another country and you've only been here a year or two, then you're likely going to have limited resources on how much credit you've established in Canada. One of the pillars, as Andy mentioned, that the bank uses to establish if you're going to be worthy of getting a mortgage or not, and approved for getting a mortgage or not, is that credit piece. So they want to know that you do have a good credit history and do have the ability and the want to pay back that debt. So credit checks are one of the things that they do go through. Now, one of the biggest drivers of the Canadian economy is, and the first-time homebuyer market in general, is new immigrants coming into Canada. It's actually probably about 30% of the homebuyer market here in Canada growing. So they wanted to make sure that they developed this special program to be able to enhance the ability for our new immigrant friends to get into housing quicker and earlier. Now, one of the things that they've done is they can use Canadian bank statements, rental payment histories, and utility payments as credit support. Now, what we mean by that is there's a couple of different tiers. So, what they typically ask for, you have to be here at least 6 months typically to get into that New to Canada program if you don't have any credit established in Canada. If you are from the US or the UK, they do have fantastic international bureaus that you can pull, and we can use that same as normal credit. A lot of countries across the world, if you have credit bureaus that you can bring with you or send to us, we can use those as support for your credit history. But if you don't have any of that and you don't have any Canadian credit history established, they do need to some way to show that you are a good credit risk. And one of the ways they can do that is by showing bank statements. By showing 6 months of bank statements, they can show, yeah, you've handled your Canadian bank account really well for 6 months. That shows some weight with the lender, and they can approve that. Okay, that is if you've been here for 6 months. That's great. The one drawback for for the 6 month window is that you'll be able to use the 6 months bank statements, but you do have to come up with a 10% down payment. So this is where the first-time homebuyer incentive comes in very, very handy. So what we do is we actually marry the two products together. You'll still have to come up with your own first 5% of your own resources. And then we'll actually use the first time homebuyer incentive for the other 5% to get to that total of 10% that's required under the New to Canada program between 6 and 12 months here in Canada. So it's a great way to use the first time homebuyer incentive and still only have to put out 5% of your own resources. Now, one of the clarifications I wanted to make on the gifted down payment, Andy mentioned some great points on the family gifted down payment. The one thing on that gifted down is we cannot use it for the New to Canada program, unfortunately. So the down payment for New to Canada does have to come from your own savings, and so you do have to either by money that's brought over with you when you immigrate into Canada or savings that you've developed over your time in Canada. The big thing I do want to talk about with that down payment, if you are bringing it from another country, bring it over right away. Get it put in that Canadian bank account. Let it sit and marinate in there for the 6 months that you're ready to go, so that when we go back and look, there's a history of showing the bank that you do have that money in there. It's really easy to track. But big thing, get that money brought over here, get it put into that Canadian bank account right away. Now we can actually use a couple of different statuses here. Andy mentioned that we can do permanent residence and also work permits underneath the New to Canada program. The work permit was actually just recently brought back in for us to be able to use new immigrant friends coming over on work permit. So if you're here on a permanent residency, perfect. The New to Canada program works great for you. But if you're here on a work permit, as long as that work permit has 183 days left on it, you can still get into the New to Canada program on a work visa as well. So great options there for you. As I mentioned, down payment options. If you've been here for 12 months or longer, you can get into that New to Canada program still at the low down payment of 5%. What they typically use there is if you've got 12 months of Canadian credit established, great, we'll use that. If you don't, there's a couple of ways that we can use what's called alternative credit to show your credit history. We can use rent payments for 12 months. We can use utility bills for 12 months. So if you've got a power bill or an SGI car plate or a Saskatchewan power bill, anything like that, SAS Power, SaskTel, anything like that can be used. As long as we have a 12-month history of you making those bill payments, we can use that for alternative credit as well. And of course, as I mentioned, that government first-time homebuyer grant is absolutely essential for those people here for 6 to 12 months. You put in 5% of your own, we use a first-time homebuyer incentive for the other 5. It's a really great way of getting into a home still using only the 5%. So New to Canada program, we do a ton of it. We do it very well. What we're going to do is really analyze your credit history, how long you've been here, to come up with the down payment needed and how you're going to fit into that program. And I'm going to walk you through all the steps. But know that there are some great options for you to get in, even if you are a New to Canada great immigrant friend, or if you have been here for as long as it's been under 5 years, we can use that program very well for you. Back over to you, Andy.
Awesome. Thanks, Ryan. That's a lot of good info, especially for New to Canada. We've used it a lot and it works. Ryan, if you want, can you throw in the chat the current interest rates right now? I had somebody direct message me on that, so you wouldn't see it, but just throw in the chat what the current ones are, just for everybody to know. And yeah, then I got to keep moving here because we are about 20 minutes to 8 here, and I got to rock through some stuff here. So all good things. Keep the questions coming as much as you can. Again, I'm going to throw in the booking link there again. By all means, click that link, book a one-on-one call with us, and then we'll get you hooked up for sure. So one last thing on the pre-approval side of things is I've had it asked before if we can use a co-signer, and co-signers are an option if you need one. Again, like everything, they are an option again if needed. Now, a family member can co-sign for you as long as they can be approved for a mortgage, have an income, a permanent resident or a Canadian citizen, right? They can co-sign for you. There is a risk to it, obviously, on the family member that's co-signing for you, right? So if you don't make your payments, they're going to come after them for the payments. So there's risk there. We want everybody to be aware of when it comes to that. They are going to be committed to being a co-signer for you as long as you can't be approved on your own. But once you are approved on your own, then then you can go ahead and get them off the title and free and clear from there. There is extra cost to that later on. Like when you're buying a house with a co-signer, it's going to be the same amount anyways as a normal one. It's just later on when you want to get them off your title and free and clear of it, you would have to pay a lawyer to do that transfer. And I think the last time I checked for somebody is it's about $700 to do. Again, you can shop around different lawyers, but I've asked about 2 or 3 different ones and are all about that $700 range. So just an idea, but co-signers are a good option if you do need one, again, like everything. So then the last and final thing I'm going to get to on the finance side of things before I jump really quickly to the real estate stuff is the mistake of using your bank. Now, again, a little disclaimer, there's nothing wrong with using a bank. I use RBC personally just because it's local here in Warman. My dad is the general manager of a credit union down in Maple Creek, Saskatchewan, where I was pretty much where I grew up since back in 1992 and until I moved out of home. So I have nothing against banks or credit unions or anything like that. I just, when it comes to buying or getting a mortgage and buying a home with them, there is some issues I want to address. And, it happens more often than not. So I just want to show you kind of what to watch out for. Now I'm going to do a quick story. I'm gonna have to leave a lot of details out of it because I don't have a lot of time, but just to give you an idea of what it was like working with a bank at this time. So there was a family that I was helping out. They were just having a new baby girl. She was pregnant and they were looking to find a new house because the house they're living in was way too small for another child. So we put their house on the market. And so we were selling her house. I asked her if she's pre-approved for another one. She says yes. She's with her bank. I'm not going to say what bank it is, but I said, okay, well, just, because I've had history with banks, I would highly recommend you talk to my guy Ryan and see what he can do. And they're like, oh, no, we've been with this bank for years and they've always treated us well and all this. And I said, okay, that's fine. So they're pre-approved and we went and found them another house. We put the offer in. Again, it was a multiple offer situation. We ended up winning that offer, but I did need to get a hold of their whoever their person was in charge of the mortgage and ask them a question about it's a bridge loan. And again, a bridge loan is just because they wanted to take possession of the house before the new owners took possession of their house. So I'm not going to get into details what a bridge loan is, but I just needed confirmation from their mortgage guy that they could get that. Well, of course, it was 7:30 at night and the banks were closed and there was zero chance of me getting hold of that guy. So I talked to the agent on the other side and I, talked to them about it. And they said they're going to accept our offer as long as we get that confirmation tomorrow, which I did and all was good. So that was okay. So we, like I talked about the condition, I don't remove conditions in a firm sale of a house until I get the confirmation that there is mortgage approval, like the full approval, right? So I've never lifted conditions without Ryan showing me the letter and telling me it's all approved and good to go, right? That's the beautiful thing about working with Ryan is that he gives me that guarantee that it's approved and ready to go. These guys they did send me an email stating that it's approved, and so I removed conditions. Fast forward a little bit towards the possession date. It was about a week before possession date, and I contacted the lawyer they were using. And he said he hasn't heard anything about a mortgage instructions or anything, which kind of had me a little bit worried. So I called the bank and I could not get a hold of this guy. I called and I just kept getting voicemail after voicemail. So they ended up actually going into the bank and trying to talk to them. And what happened was they didn't do the mortgage processing correctly. They actually didn't process it at all, which was a nightmare in itself. But during this part, this is when the interest rates were rising heavily last year. And so they were approved for, let's just say 400,000. I'm not going to say the actual number, but they were approved for 400,000. But as the interest rates rose, it kept kicking down their approval amount because the interest rates are rising, and it ended up kicking them out of how much they were buying that house for. So now they're on the verge of getting kicked out of their house they just sold because the new owner's coming in and not being able to purchase their next home. Now it's just a big panic. Their baby's going to be on the way. They're going to be homeless. It was a disaster. The bank would do absolutely nothing for us. It was a big ordeal. We were in that bank for hours and hours, and they just basically couldn't do anything for us, which was very frustrating. And so anyways, long story short, I called up Ryan and I said, we need a home run here, buddy. And he ended up finding the right lender that got them the right amount to be approved for, just barely enough that we got it. We still managed to save the deal and they didn't end up being homeless. So again, not every bank is like that. Don't get me wrong. I'm not saying they're all like that, but I've ran into it a lot lately. There was another house in Bigger that I purchased, and they used a bank. And again, same idea. It was just way too hard to get a hold of them. I probably would call them constantly every day to get an update, and they just never would answer. It was very frustrating, especially when you're trying to purchase a home, right? It's a lot of stuff, a lot of moving parts, and we need that constant communication. So again, not all banks are that way, but not the easiest to deal with when it comes to, especially with real estate. Real estate doesn't necessarily sleep. A lot of the action happens after hours or on weekends. So we need to be able to contact. One of the main parts of real estate is the mortgage broker, right? So I've probably asked Ryan many questions on weekends and evenings. I try not to bug him, but hey, we like to talk to each other every now and then. So that's the nice thing about it, is that we can get that constant contact when needed, right? So a little bit of difference between a broker, a mortgage broker like Ryan, and a bank. So what Ryan can do, just like I can do, is we can shop around to a bunch of different options, right? He has access to over 30 different lenders' products, where the banks are restricted to their in-house product, right? You go to RBC, Scotiabank, Bank of Montreal, they all have their own one product, where Ryan can shop all those banks, or most of those banks, and other lenders as well. Ryan also works the same hours as me, where, if it happens in the evening, he's going to help you out, as and that's on the weekends for sure, right? The banks work normal bank hours, Monday to Friday, maybe Saturday, who knows? But once they're closed at 6 o'clock or whatever it is, that's it, they're done. There's no communication after that. Ryan's going to offer you the best mortgage rate up front, or the banks are going to offer their bank posted rate, which you necessarily would have to negotiate a better rate for. So Ryan's just going to get that out the way right away and just give you the best rate. And rates are huge, right? When you're looking at, let's say, a 5% interest rate versus a 5.5% interest rate, we're talking hundreds of dollars. Like even if it's $100 a month, as simple as saving $100 a month, it doesn't sound like a lot. But when you think about in the long term, $100 a month over a year is $1,200. Take that over 10 years, that's $12,000. I would rather see you take that $12,000 worth of equity in 10 years than lose it just because of a higher interest rate, right? It just makes way more sense to go with the cheaper option if you can, right? That's the huge thing. Again, Ryan works for you. Like, the thing with Ryan and I, we like to stress all the time, is we work for you, not for anybody else. We make sure your money is protected and going to where it should be going, right? So, and our service to you is free, right? You don't have to pay us a fee to buy a house. You don't have to pay Ryan a fee to do the mortgage for you, okay? Whereas the bank, they're, they do work for you, but they have an employer, and that's their bank, and they need to make sure they're happy as well. All right. You can call Ryan anytime or text him anytime if you got a major question for it, or you need help with something. He's there to talk to you. Where again, the bank, once it's after hours, you won't get to talk to him till maybe the next day, right? So just things like that to think about. Again, I don't want to bash banks, right? My dad's run one for years. Again, a credit union, not a bank, but I've worked with banks before. There are some good ones in there, but it's way easier and less headache to work with a mortgage broker like Ryan. It's just so much more smooth. The other thing that's helpful is there's also bank penalties you got to worry about. So we get a mortgage for about 25 years, right? And so if you decide you need to move in 5 years or 10 years or whatever, whether it's a new job loss, families growing, families, downsizing, right? Whatever your reasons for selling early is, that's okay. Everybody does it. Lots of people do it. It's rare that your first home turns into your forever home, right? So whatever the change in life comes, we want to make sure if there are any bank or payout penalties to your mortgage. Now, Ryan will be able to tell you roughly what those would be, hopefully little to none. You can't guarantee there's no payout penalties, but at least give you the idea of what it's going to be, where banks can technically be a little, there has been horror stories of like $30,000 payout penalties, right? And we want to make sure that's not, because we don't want you to eat your, the money you make on your house into payout penalties. That's ridiculous. You want to use that money to get you into a better home, or downsize into a smaller home and have much more money in your pocket, okay? That's the major thing. Again, we're here to work for you and to make sure your money goes to the best option possible. And if we can pocket more of that money for you, even better, okay? Okay, so that's pretty much everything when it comes to the finance side of things for now. Again, keep all these things coming, pop all the questions in as you can. Here's a booking link again. Book a call with us one-on-one. if you're ready to either move forward with it, see what you can get approved for, or if we got any more questions on that part of things. I am running a bit of over time here, so I'm going to have to quickly run through just this real estate side of things. So just bear with me on here, and then we'll get to the very end where we can ask all the questions we need. So another mistake here is buying directly from a builder. I don't talk a whole lot on new builds just because most people buying a new build, it's not their first home, right? A lot of new builds are more for people looking for their forever home where they can get in and they can start developing it the way they want. There's a good chance with a new build, you're only going to get the main floor and the upstairs done. The basement's going to be open for development. A good chance that the garage isn't insulated or drywalled. A good chance there's no landscaping in the front or backyard. The driveway might be poured, but there's not going to be a fence or anything. So you're going to put a lot of money into a new build to make it what you want. So that's why a lot of people don't go for those right away, but some do. So I need to touch a little bit on this. The thing with builders, they're a lot like banks. They're going to sell their product and their product alone, where I can show you all the different builders and what those builder products are. I can show you who the good and bad builders are. Just I can't say that on here because it is recorded. I don't need that phone call. Also, the biggest thing is negotiation. Just like buying a resale home, I'm going to negotiate on your behalf to get you the best deal for it. Also, with new builds, they don't touch the purchase price, because if they lower the price on one new build, it'll be a domino effect and it'll be less and less price in all the other ones. So they stick firm to their price. But I can negotiate things in that for you. Like if there's no appliances, I can negotiate an appliance packaging for you, or landscaping, or little things like that, or maybe some upgrades to the home that you want to put in. We can we can negotiate that. Again, that's a thing I do for you. If we can't negotiate purchase price, we're going to negotiate items for you. Okay. The other thing is, I've had people ask if it costs less to go directly to the builder instead of bringing me with you, and it's the same price whether you bring me with you or go directly. But the beautiful thing is, again, you're losing knowledge without bringing somebody that working on your behalf. Again, you want somebody who's going to be on your behalf, not just to try to sell their product. We're going to look through the contracts together. We're going to make sure there's no weird clauses like, if the price of materials rises, so does the purchase price to make up for that, right? That is a clause in, I've heard of some builders have that clause in there. So we want to make sure that's not in there, right? We want to make sure that your money's protected, right? And if any other weird stipulations that are in these contracts, we need to make sure is correct before we sign anything, okay? So that's a huge thing when it comes to new builds. Again, I don't touch a whole lot on it. There can be a lot that can go into these. It varies from new build to new build. So again, I can spend a lot of time, but we just don't have that kind of time. But if you want, book a call with us and we can talk about that more in detail. But one big thing I do want to talk about, especially now with this market, the way it's going, is a home inspection. Now, I know I've been rambling on for a bit, but I'm going to let you guys talk for 1 second here. Does anybody know how much roughly a home inspection is? Just let's even say for a normal house, just throw a number out there and we'll see if we're close. And then I can let you know kind of roughly what it would be. I like it. 500. Well, that's good. You guys are like, for my guy, you're a tad high, which is good, right? My guy, who's fantastic with first-time home buyers, he doesn't make everything sound scary. He walks you through everything and explains how to maintain your house. For a normal detached house, he's about 425 plus GST, so it's about 460. Now, I've heard people say, well, 460 seems like a lot of money, but when you're purchasing a $400,000 house, let's say, $400 to make sure you know everything about your house and if it's working properly is a very small investment to protect you. Because if you don't know that, let's say there's mold in the attic, or that the foundation is caving in, or there's major electrical issues, we don't want you to be on the hook to pay that major amount for it, right? So the reason we get a home inspection is it's a condition, right? I talked about that condition period. It has to be satisfied in order to proceed with the purchase. If we get to a home inspection and it is in rough shape and we couldn't see half the problems, you can walk away from the deal and find something else. The beautiful thing with my inspector too is that if you do a home inspect with him and the deal falls through because of a bad home inspection, he will offer the next home inspection at half price because you already did it once with him, right? So he'll do it for half price, but it rarely does that fall through. Most of the time, from what we can see when we're actually physically looking at houses, we can kind of make that determination. It's just, he'll check for things that we can't see, right? He'll look through walls with his infrared camera. He'll look for leaks, any mold, anything out of the ordinary, right? He looks at what we can't see visually. And the nice thing about it is that if he does find some major issues, we can go back and negotiate either the owners to fix it or give us some off the purchase price so you can fix it when you get in, right? So there's more options now. Now, like a little disclaimer is if we're looking at the house and we notice one of the windows are cracked and we still get a home inspection and we still put an offer on it, we can't go back and say, well, the window's cracked, we want you to fix it, because we would have seen that in the normal walkthrough. And, you know, we kind of based our offer on everything that we could physically see, right? But with these, they're going to look for things that we can't see and can't test, right? So a couple little, you know, examples are like electrical stuff, right? We had a house where all dryers are running off of 2 breakers that are on it with a pole, so that if one breaker trips, both of them trip, right? It's a safety feature. We found a house that the dryer was on the 2 breakers, but no pole connecting them. So if one tripped, the other one would still be going. So your dryer is now running on half power, which is a fire hazard. It's very dangerous. So we had them get a contractor go in and fix it and provide us with receipts and proof that it's fixed to make it safe for you to move in. Same house, in the attic, they noticed that the vent pipe from the bathroom that sucks up the moisture from the shower and stuff like that to vent out the roof wasn't quite connected properly, and it wasn't insulated at all. So the issue with that is that all the steam and the moisture from the shower was getting pumped into the attic, which could cause, again, a lot of moisture and ice buildup and some mold, and if it's, you know, if it doesn't get addressed in a fast enough time. So we had them bring a contractor in, fix it, show us proof that it's fixed and receipts and all that. So it's things like that. Like even my own house, we noticed a leak from our upstairs bathroom, was a slight leak from the shower into the main floor bathroom. And all it was just a little extra caulking needed around the shower and it was fixed. If I didn't get that home inspection after, you know, a while down the road, that leak would have caused some major damage and major money to fix. So home inspections are not mandatory, but I highly, highly, highly recommend getting a home inspection before purchasing any house. If you choose to skip one, that's up to you. And I would just have to get it in writing stating that you are skipping it on your own reasons, right? Just because there's so much that goes into a house, right? And a lot of it's going to be minor things like, oh, this plug here isn't the correct one, it's easy to switch out, or, you know, just keep an eye on this, you know, just little maintenance items, just like buying a car, just things to maintain in your house. But it's the major stuff we want addressed before you move in. All right. So I see there's a lot of questions. I'm just going to quickly run through the last little section here, and then we'll get to the Q&A and I'll answer them here. But again, you could save a ton of money by spending that $400 and some by saving you tons of money by not finding these major issues, right? If you don't do one and you find out later that your foundation is shot or mold issues, it's going to cost a lot of money to fix, and we don't want that. Okay. Average cost of a home inspection is about $425, $460 for a home inspection for a detached home. Townhouse is a little less, and apartment condos are like $275, I think. So that's roughly the cost for them. Well worth the money they are. I stand by them 100%. Okay, so the last final thing before we get into this is if you're buying a condo. Now, if anything has a condo board attached to it, so a property management condo company, it's going to have condo fees and what's called an estoppel. That's what it's called, which is a condo document to review. So usually apartment condos, townhouses have them. You'll see some detached houses can have them too, so we got to keep an eye on that. But so the major thing, again, this is just like the home inspection. This is a condition. If there's issues with it, you can walk away from the deal. And one of my last deals, actually, that happened to him. We had my lawyer review it, and he's like, "There's some major red flags to this. Sounds like there's going to be very, very expensive cash call coming soon." And I'll explain what a cash call is right away. But basically, they're going to ask you, the unit owner, for money to help fix the property, right? So he's like, a lot of red flags. Do not buy this property. So we moved on and found a different place. But anyways, this is mandatory to have. Like, once we put an offer in, the other agent has to get us this condo to review. What's not mandatory is getting a lawyer to review it. But just like a home inspection, it's highly recommended you get a lawyer to look at it. I know what's in them. I'm not qualified to explain it all. That's what the lawyers are for, right? But the major thing is to look for is the reserve fund, which is how much the condo corp has saved up to fix any repairs that need to be fixed. So again, a cash call happens when there isn't enough money in the reserve fund to fix anything that needs to be fixed. So what they do is it's called a cash call, where they knock on all the unit owners' doors and says, hey, we need $1,000 from each and every one of you to fix this, and you're on the hook for it, right? So we want to make sure there's enough money in the reserve fund to fix what needs to be fixed. And it also tells you what has been fixed and what will need to be fixed in the future, and just tells you everything about the condo, right? It'll tell you how much condo fees are, how much of the condo fees go towards the reserve fund, the maintenance fund, and all that. It's going to tell you what the bylaws are, what you can and can't do with your unit, things like that. So it's going to tell you everything about it, what the insurance is on it, how up to date everything is, when the last audits were, all that kind of stuff. They're gonna tell you about in there. And so the lawyer is going to review that and let you know if it's good or bad, right? But it's hugely recommended to get a lawyer to look at it, because we do not want a cash call, because that can be expensive. So again, we're all about saving you money and putting your money to where it's supposed to go. And again, this could save you a lot of money if there is a cash call coming, right? So we need to make sure that's not going to happen. Also, especially if you're doing renovations, the bylaws will state, depending on the unit, every condo is different. A lot of the apartment condos can have bylaws about renos, like some of them say you can't replace the carpet in the main living area with laminate or hardwood, because it takes away that sound barrier for people underneath. So if you are renovating, you can only do carpet in the main areas. So again, if you decide to rip out the carpet, put laminate down, there's a good chance you're going to get fined and have to replace what you've just done. All right, so it's going to cost you more money in the end as well. So those are a couple things to think about when you're buying a condo. That is needing to be checked over by a lawyer, just to review that, to make sure you guys are covered. Okay, so a lot of things to take away from it. I know there's a lot. That's kind of the end of it for now. I hope that we've kind of alleviated some things and give you an idea of what buying a home is going to look like and what you need to watch for. There's a ton of stuff that goes into this still that we just don't have time to cover. But the thing that Ryan and I stressed about, that I'm going to recap, communication's huge, right? It's always been huge. Representation is huge, right? You want the right people to represent you, the right realtor and the right mortgage broker. Ryan and I work side by side all the time to make sure that these processes go smoothly and that you're covered in case of any situation that comes up. We're there to take care of it. And it's your money. It's a lot of money, and we want to make sure it's covered and not being lost to silly repairs that got missed, cash calls, or just a bad house in general because we skipped a home inspection. So again, I want to thank everybody for being here on this. I hope this provided a lot of value in the meantime. Click that booking link if you are thinking of ready to, get a pre-approval going, or want to know more about the market or anything like that. Definitely book a call with us. I'll put it in here again. Also, another recap, this is being recorded, so if you guys want to re-look at stuff or re-listen to stuff, I'll have that sent out. Good chance that it's going to be hitting your inboxes on Friday. So make sure you check your inbox Friday, your spam folder as well. If you still don't see it, reach out to me. I'll get you the direct link on YouTube. But yeah, hopefully that was beneficial for you. So we're gonna Ryan and I are gonna hang out here, and we're going to answer all the questions that I either have missed or that you guys have. So keep them coming. We're gonna stick around for a while. Also, I'm gonna put in the chat here. Here's the booking link. Here's my direct email address, my direct cell number, and then my link tree as well. So that's how to get a hold of me the best way. Ryan's number I'm going to put in here too, so you're able to contact him directly as well. But those are our direct contacts. But we're going to get you that all in an email as well. So I'm going to let Ryan take over a little bit here. I'm going to catch my breath for a bit and kind of see if I missed anything here.
I think we're doing great, Andy. We've had some great questions coming through the chat box. Lots of stuff on new to Canada. That's great. I know that is a bulk of what we do see on these webinars, which is fantastic. The big thing we want to point out, guys, number one, Andy and I are a team, and the communication that Andy mentioned is paramount. We want to make sure that we're constantly talking to one another, so we can make sure that we do set things up the way that you need and get things done the way that you need and get things done efficiently and quickly for you, especially with the new to Canada stuff. There's a lot involved with it, especially if we're using the first time homebuyer incentives, things like that. So we want to make sure that we have gone through not only for the mortgage pre-approvals, gone through the information, but to find out what you're looking for, what sort of a price range you can qualify for, what you need, what sort of a down payment you have. So working as a team is really, really important. Number two, I noticed that we got some great questions on the first-time homebuyer incentive, specifically on the incomes. Yes, the first-time homebuyer incentive, it's designed for lower income families to get into housing quicker. So one of the biggest things the government did impose was the income limit of 120,000 per family. So if you have a family income over $120,000 per year, unfortunately, you don't qualify for the first-time homebuyer incentive. But if you're making that kind of money, you probably have a good savings already anyway. So it's really designed to help people in that lower income range. You use a little bit more down payment to maybe get into a higher priced home. So, yeah, some great questions here. Big thing, if you've got those great questions, it probably means you're at a good cycle to really talk to us specifically on your specific situation individually. So click that link. Let's get some one-on-one conversations going. Andy's put that booking link in there. Click on that link, set up a meeting to talk to us one-on-one, and we can really start to analyze your situation and get those specific individual questions answered for you and go through the process. So yeah, there's the booking link there that Andy's just popped up there. Click on that link, get a meeting set up to talk to us one-on-one, and we can really go through your individual situation and make sure we get you set up all ready to go. I mean, if you're ready to go now, perfect. We'll go through, we'll set up that pre-approval, we'll get you starting looking at houses. If it's maybe something that you're looking at just gathering some information to maybe buy in the fall, again, click the link. Let's find out what your situation does qualify you for, and maybe you might be in a position to buy a little bit earlier as well. So, but let's analyze that situation. Click the link and let us talk to you one-on-one.
For sure. Absolutely. Yeah. I'm just trying to go over here. Did I lose? Oh,
Just seeing if we have
there we go.
any other questions here that we can answer just on the over the mic here. I got a great question from Alexis. If I buy a house with a work permit at the end of it, should I sell the house or can I keep it renting it? You can actually keep renting it, absolutely. The big thing with the New to Canada program, they do say it's got to be an owner occupied house. But if you buy a house and you maybe rent that house out and you want to buy another one, you can get into another one for 5% down as well. That is absolutely allowable. Great question, Alexis. Oscar, thank you for the informative session. You're very welcome. Thank you for attending today, Oscar.
I wanna
Um,
I wanna touch on that home inspection when I see it is can you challenge the inspector later if he's unable to inform the time of the inspection? So I'm guessing you're talking if he missed something in the inspection. Now, home inspectors like us have errors and omission insurance, right? So if they do miss something major, but the guys that I recommend have been vetted. I've worked with them for a long time. They are good. They don't miss anything, right? I've worked with, just like Ryan, before I met Ryan, I've worked with other mortgage brokers and they just, they don't provide the right value that I found for clients. They didn't talk to you guys. They didn't find out what you're about, right? So that's why I found Ryan. We connected right away. He's very, very good at working with you. And that's the same with all the professionals that I recommend. So whether it's a home inspector, whether it's a lawyer, right, financial advisors, anything like that, they've been properly vetted and are one of the best to do it, right? Again, same thing with home inspectors. I've worked with other home inspectors on other places, and some of them are just, they make everything sound awful. The whole house is bad, even though it's just maintenance items, right? So I found ones that work great with first-time home buyers, and they're very, very thorough. They make sure not to miss anything, and even if you need something that they find, or you have questions about maintenance on it, you can contact that home inspector, and he'll elaborate on you. So I really can't touch on if you can challenge him later on, because honestly, I've just never ran into one that has missed a ton of stuff that was a disaster. I have heard of things like that, but I'd have to find out what they did about it. But all the ones that I recommend are top-notch people, right? Like Ryan, top-notch, right? So let's see what else. I just wanted to touch on that one. What else do we got here? Oh, anything else? Is a condo good to buy or not? So that's a good question too. I hear that lots. Now, again, that kind of comes down individually to your needs and your wants, really. They're not a bad investment by any means, right? Like sometimes people like to start out in a condo, let's say a 2-bedroom apartment style condo, start out with that, start building some equity, and then you could either choose to rent it out and use that rental income to up your up your pre-approval for your next home, or you could sell it and make some money off it, because right now apartment style condos are on the very low end still. They are quite cheap. The bad side of it for sellers is they are on the low side, so they are losing a lot of money. I sold one from my my brother-in-law's sister. She sold one out in Sutherland, and they bought it for, I think it was around 180 in 2007, and I think we sold it for 114, right? So it's a big loss people are taking on these condos. So to buy one right now is good because they're on the low end, right? Same with, but if you're just talking condo fees in general, right? Again, it's all depends on preference. If you are buying a townhouse condo, and it's nice because you don't have to do maintenance. You don't have to shovel your sidewalk. You don't have to mow your lawn. You don't have to worry about the exterior of your home for maintenance, because they're going to take care of it with the condo fees and the reserve fund, right? So if you like to travel and you don't want to deal with the maintenance, those are a good option. I know lots of people that are looking for strictly a condo because they just don't want to deal with the maintenance if they want to travel for the winter time, right? So it's all depends on what you want. So it's never a bad investment. We just got to make sure to find the right one, right? And we want to make sure that the condo fees aren't sky high and there's issues with the condo corporation, right? Like I said, the one I dealt with, it was red flags everywhere, and it's very rare that happens. I've yet to run in. That was the first one I ever ran into that they red flagged that estoppel package, because it was just missing audits. It was not the right amount of funds were going to the reserve fund. They weren't even sure the right amount was in there that they stated was in there. It was just a mess. So we just want to make sure you're covered with that. All right, so you got the life insurance one is covered. Also, I do know, just for a heads up, I don't know, it's just a random thing. I was thinking insurance and stuff like that. So with home insurance, if you get an alarm system as well, it does reduce your premiums for home insurance. And again, I know some great home insurance people. So if you are buying your house, you need to find out because you have to provide home insurance. In order to sign with the lawyers before you transfer the titles, you do need to provide proof of home insurance for the day you take possession. So you are going to have to find home insurance as well. And so we know some great home insurance brokers that you can shop around and get some really good rates on and things like that. But also, if you have a home alarm system, that will reduce your rates as well, just to help you save more money as well. I am in no way selling home alarm systems, so don't get me wrong there. I'm not in that profession, but just things I find out as I go. If there's anything else, I'm going to throw this in there again. I see some people have already booking with us. That's fantastic. I'm looking forward to talking to you all. But yeah, this is great. Keep throwing out the questions if anybody's got any more questions. I do want to say, like, and I'm not going to make it sound scary or nothing like that. The market is moving fast. It is very fast. Houses go up and they go down just as quick. So don't be discouraged, because there's always options coming out. It's just, you got to be on the right, you got to jump on houses as they come up. You got to, it's a little tougher, especially for a first time home buyer, because you've never done this before. It's a bit stressful, just because you have to kind of make a decision faster than you would like. I remember when I bought my house back in 2016 here in Warman, I picked probably from a list of 10 houses. I drove down here and I looked at all 10 and we picked one and we're able to negotiate. Here it's more like the minute it comes on the market, we look. The minute it comes on the market, we look and make a decision, right? It's a little bit different. Sometimes it can be a bit discouraging, but again, that's what Ryan and I are here for, to answer any questions and make it, very helpful in the decision-making process and what the right thing is to do, right? We can't force you to buy anything. We can't force you to use your money, but we can just guide you on the best way to use it, and the best bang for your buck is what we're trying to do here.
And just a little clarification on that as well. That really is kind of highlights the importance of going through this process with Andy and I early, getting that pre-approval done, going through that process, letting us kind of go through and analyze the income and the down payment and make sure that you're all ready to go so that you know when you do find that perfect house, you can make a decision very quickly, knowing that you have the backing of, getting that mortgage approval, that pre-approval done on our side already. So really kind of accentuates the importance of doing that and getting into the process early with Andy and I, because once you do find that perfect home, we want you to be able to pull the trigger and get into that home quickly. I did have one question here on interest rates I wanted to jump into. I was going to type it out, but I think I'll just kind of talk about it. Um, Interest rates are a little bit like predicting the weather. Believe me, if I could predict if interest rates were going to go up and down, I would probably be a very rich man, because I would say, yeah, you know what, invest in Apple stock because it's going to be $800 by the time you're 40. But we do have some leading indicators that we are watching. And my very humble opinion, and take this, for kind of what it's worth, as inflation does start to go down, those interest rates are going to start to go down. With what kind of what's happened, COVID really brought out, when COVID first kind of came in 2020, the government was really so fearful that the housing economy was going to stop or slow, that they wanted to make sure that they kept that going and kept the economy going. So interest rates really dropped down about 2%. Now, the normal Canadian economy runs very well at about 4 to 5% of an interest rate. So that's kind of where normal is. Now, people with mortgages, of course, want those mortgage rates to be low, but the other side of that interest rate equation is people with investments want them to be high. So there has to be some balance in the economy. Typically, what happens is money from investments comes in and then they lend it out on the mortgage side. So they're really tied. So people with the investment size want them to be up. It's got to really be in a good spot for where it works best for both. So really that 4 to 5% is kind of the sweet spot and the normal spot for interest rates. Now, having said that, we're kind of right up around the 5%. So we kind of are on the high side a little bit right now. Inflation is starting to come down, guys. The government is starting to get it under control. It is starting to slowly creep down, and we are expecting rates to slowly come down from that 5% mark, kind of right in that probably 4.5 or just slightly under that. So not dramatic rate drops, but very slight rate drops, probably back into that mid or low 4% range is probably where we're going to see those come in about a year or two. That's kind of my humble opinion on what they're telling us. A few things that are kind of keeping those rates up. The war in Ukraine is still running. That's holding fuel prices quite high. That's holding grain prices quite high. We're still seeing some supply chain issues, and we're still seeing the cost of food being up quite a bit. So those things are starting to quell. They are starting to go down, and we do expect that rates are going to start to normalize here, probably between a year and two. So hopefully that answers that rate question. Again, just my humble opinion on that as well.
There's a couple more for you here. I just want to point out one more thing too. Just an experience that I ran into today. A very close colleague of mine that I work very closely with. She's selling her client's home. I'm not going to dig into a lot of details, but just so you guys are aware, back in I think she said 2020 or 2021, they locked into, or not locked into, but they took a variable rate at 0.9% from their bank. And now it's over 5%. They have to sell their home because they are now over $1,000 more a month than they were when they first started. And I asked her, I'm like, how come they didn't lock in at one time? Because they kept advising them not to. It's going to be different. Don't worry about it. Now they have to sell their home. So again, a huge importance to stick with the right people that are going to give you the right advice and not force you to sell a home because they gave you bad advice. Yeah, I forgot I ran into that today. Just a little quick thing to think about too. So we got, how long is it?
Honestly, some great information there. I'm just kind of going through and typing the last couple of questions here, Andy. If you want to wrap her up.
Yeah, we can. I just see, how long is a pre-approval good for? Usually it's about 120 days or so. Hey, it's when a pre-approval will hit the credit score. that one time, but that's it, right? So once you get approved, it's not going to hit it again, and they know you're shopping for a house, so it's only going to hit that one time, and you'll be good to go. So it is going to give you a hit, but that's the only time it's going to do it.
And honestly, just a little bit of clarification on that. The question that came in from Caroline was how good is the pre-approval good for? If we actually take that to a lender for a rate hold, that's kind of when that 120-day
Sure, yeah.
timeline comes in. The bigger reason for getting a pre-approval is really for you and I to have a great chat so that we can go through and I can go through and analyze your income, your down payment, your credit, kind of those three pillars that Andy was talking about, and go through and run the numbers and find out where your purchase range is going to be. That's kind of the bigger point of going through and getting that pre-approval done, is finding that amount of house that you really qualify well for, that your down payment is going to be properly suited for, and just to make sure that the credit is good to get that approval when we need it. That's the bigger part of getting the pre-approval. We do have a few lenders that we do pre-approval rate holds for, but rates are going to start coming down. So really that rate hold isn't such a big deal right now. It's more getting your situation looked at and making sure that we do get a pre-approval amount for you, that when you go out with Andy to look at those homes, we're getting homes that are suitable for your price range. And the question on does the pre-approval hit the credit score? Only if we pull the credit. So there's lots of people that I'll go through and analyze the situation, and as long as they do, we have the conversation. How's your credit? Do you have any missed payments on there? I don't have to pull that credit bureau all the time. So I mean, if you say, yeah, my credit's perfect, I've only got a couple of credit cards on there, I'll say, based on your income and based on the down payment and the information that you've given me, you would qualify for a purchase price of this amount. If we don't pull the credit at that time, it doesn't hit the credit score. But also know that pulling a credit check is a very minimal change to your credit score. Your credit score number is typically between 300 and 900. Most people are up around that 657 or 750 kind of a number. To do a credit check, it maybe affects your score by 1 point or two. So it might knock it from a 702 to a 701. As long as it's over kind of that 600 mark, that's the minimum to get into a mortgage or get an approval with CMHC at 5% down. So don't worry about it just a credit check impacting your credit score. As long as you pay your bills and you keep your credit under a kind of a limit, those are the big impacts that affect your credit score. Pulling a credit check really doesn't do that. So don't worry about that credit score being impacted by a credit check. That's a bit of a myth. Another question here. What is the minimum fixed rate that can be locked in for? Really, fixed rates are based on the term length that you want. So we have anywhere from 1 to 5 or even 10-year terms. And that's kind of where the rates are set. There's different fixed rates depending on how you want to lock in, how long you want to lock in for. So Manny, give us a call, set up a booking, and we can go through, how long you typically would like to lock in for. Are you looking for a shorter term mortgage, maybe between a year and 3? Are you maybe looking for something a little longer for stability to 5? Typically, the best fixed rates are on the 5 years. So if you're looking for the best rate out there, the 5 year is typically the best rate. Right now, they're kind of just over 5%. Depending on which lender we do go to, we do have some great options, as Andy mentioned. There's 30 lenders out there, but give us a call and we'll kind of go through and find out what term works best for you and get you the rate locked in, or get you the rate for that term. Which gives more return on investment, a condo or a townhouse in the current SaaS market? That's a bit of a loaded question. That's a great question, Aslam. It's one of those things. We found that recently you're specifically saying condo or townhouse. So typically the best return on investment has been that single family home over the recent past. I would say probably townhouse next, and then maybe the apartment style. Andy, if you want to chime in on that, you're probably more the expert on valuation.
Yeah, no, for sure. Your single detached family home is going to be your biggest return of investment. Those grow they grow, anywhere from 2.5 to 3% or even a little higher, 3.5% every year, like year over year. House values just are constantly rising. Townhouses are a little less because you're limiting the amount of people looking for them because lots don't like the condo fees, but some are okay, right? It's a more distinct handful of people that want those, and then again, your apartment style condos are going to be your less amount right now. They're on a very low point because there's just so many of them on the market. There's so many to choose from. It's very saturated. So if you're looking just simply in terms of equity and how much you're going to build, single family detached, then semi-detached, row townhouses, then apartment condos for sure. It's just, but even like everything's still moving fast. Townhouse condos, not so much, just because again, like I said, there's so many of them. But return of investment, if you are investing in something, single family detached house all the way, right? It's especially if you're thinking in terms of rental income, right? You find a single family detached home and you can put a basement suite in there, that's extra rental income, right? You find one with a legal suite, that's extra rental income. You can rent the top and the bottom. We have a house listed over 343 Avenue Q North, and it technically at the time before he gutted it, it had 3 suites in it. Top upstairs had a bachelor suite, main floor had a 2-bedroom suite, and the basement had a 1-bedroom suite in the basement as well. And we're currently working on getting that basement renovated back, but huge rental income opportunity right there to have multiple families in there. It makes a really good rental income. But for sure, if you're looking on ROI, single family detached is the way to go. We're just I seen that one about matching any of the competition interest rates. Now again, that's awesome. It's really great because I recommend everybody, because I've had lots of people still say, my bank is, really good to me and all that, which is again fine. But everybody I recommend is no matter what you do, if you go to your bank and they give you a rate, 100% bring it to Ryan. Let him figure out if he can match it or beat it. And 9 times out of 10 or 9.5 times out of 10, Ryan's going to be able to. There's a select few. I know there was that one we had, but that was a very, very kind of a rare occurrence where I had a doctor that moved in, and RBC had a really good plan for a doctor that it was a little bit tougher for Ryan to beat that. But that was the only thing. Other than that, Ryan's going to beat it. It's just going to save you money. Right, it's very rare where he can. That's the hugest thing. Is definitely shop around is the thing. So if you go to your bank, call that to Ryan, tell him that the bank gave me this rate, what can you do? And Ryan's going to show you how he can save you money. Again,
and I honestly, trust me, guys, if you get a smoking good rate and I can't touch it, I'll be the first guy to tell you that's a great rate. You should take that. Keep remembering that I'm here to help you. So I'm not going to put you in something that doesn't benefit you. So if you get this smoking special rate, bring it to me. If we can match that, fantastic. If not, I'll be the first to tell you that that's a great rate. You need to take that. And that's the honesty that we will always work with, and the integrity that we work with. If there is a great rate option out there that you have that I can't touch, I'll be the first to tell you that. So know that we're always going to work hard to get you a better rate, and more often than not, my rates are quite a bit substantially lower than the big banks. But hey, if there's a special rate that they put out and you say, you know what, Ryan, I've got this great rate, it feels a little good to be true, and I'll be like, you know what, that's a great rate. If you can get that, take it.
Yeah, run with it. Hey, that's the huge things. And again, a lot like Ryan too is we're not here to put you into a house just for the sake of putting you in a house. Ryan's going to get you the best rate. Like he said, if he can, he's going to be the first to tell you. Same with, especially with the way the market is and the high offers and stuff like that. I'm not going to tell you throw all your money at it just because. It has to be worth the money to do it, right? If we look at a house and it's okay, but I don't think we should go over asking price, I will let you know that, right? I'm not here to just tell you to put your money into something and walk away, right? So that's a huge thing too. We don't want to do that. And there's the other question here I seen was, how much will a single family detached cost on average in Saskatoon? So the average home price in Saskatoon right now, I believe, is 325 to 340 is roughly the average home price in Saskatoon. But again, that's all dependent on areas, right? Obviously, the further east you go, the higher the average is going to be over there. The further west you go, little bit less, right? The center of the city, you know, we talk about the alphabets, right? That's going to be your lowest, right? And then of course we get south into the fantastic neighborhood of Stonebridge, right? It's all relevant to each different area, right? But just if you want to generalize it all, the average home price is about 340 roughly right now in Saskatoon. Yeah, okay, so you got that one good. Do you shop across the different banks? Again, I can let Ryan touch on that, but again, Ryan can walk through most of the big banks. There we go. Yeah, seen it. Yeah, and then I'll top lenders too. And I've talked to Ryan about this lots too, the whole top lender thing. There's another buyer that we are working with together right now, and he asked me the other day when I showed him a house. He was curious on what the interest rates were. And so I asked Ryan, and Ryan gave me whatever the number was at that time. And so he Googled it really quick. And he's like, well, this is what the internet says the interest rates is. And it was probably, well, I don't know, 0.3 or something percent less. So instead of, you know, whatever it was at the time, 4.8 is what Ryan said. And I think they said, well, this one says 4.5 or whatever, 4.57, right? And he's like, well, that's a better rate. And it's like, yes, but there's a big but to that. That's with a lesser lender, not a good quality lender. And again, I can let Ryan touch on that. But you know, things to look out for when you're not using a top-notch lender as well, right? Yes, it might be saving you a very little amount with a very little bit of a different interest rate, but they can tend to have issues like balloon payments that you aren't aware of at the very end, and just not good for customers kind of thing, where these top lenders are great for customer retention, great for programs, and not having these scary balloon payments and things like that. Again, that's more Ryan's thing. I don't want to overstep. I can let Ryan explain a little bit more of that. But yes, top lenders is a huge thing.
Yeah, no, I'll jump in there. That's a great segue, Andy. You know, we get asked all the time because I think it's probably the biggest question that people are wondering is they think that because a lender has the best interest rate that it's the best product for them, and that's just not true. We are absolutely going to get you the lowest product or the lowest rate that we can get, but we want to make sure that we're putting you in the best possible situation with the best lender product and the best bank out there that we can to make sure that you're covered all the way across that. So, you know, you might get a rate that is 0.1 lower than you know the bank, but you want to make sure that there are no hidden clauses in there. There are lots of times they say you can't refinance out of that. You can only pull money out if you sell your home. If you break the term, there's an additional $5,000 balloon payment, things like that. So we always want to make sure that we are not putting you in a situation that you're going to be in trouble with that mortgage as well. We want to make sure we put you with a top great long-term Canadian backed lender that offers a great rate to get you into that home. So don't always think that because somebody's offering you a nickel cheaper on rate that it's the best product for you. There are many factors that go into ensuring that mortgage is the right one for you. Don't let rate be the only factor that you look at.
And again, that just comes down to us making sure that your money is protected, going to something valuable, and not losing it to silly things like those clauses in there or other things like that. Yeah, I don't know about that. That's more for Ryan too. Bank offers cash back on mortgages. Is that legit?
Yeah, it is a legit product, Bhupinder. That's a great question. Usually what that cashback comes with is a higher rate. Banks don't give away money for free. So typically if they're giving you that cash back, they're giving you a higher rate to be able to do that. They're essentially going to say, yeah, here's 500 or $1,000 or $2,000, but they're going to be charging you a higher rate. So essentially, you're going to be paying that higher rate to essentially borrow your own money. So your best rates are always going to be on those non-cash back offers. The banks offer those as loss leaders to get you in the door, to sell you a bunch of bank accounts and things like that. The lenders that we use typically they are only mortgage lenders. They're great at what they do. They're very efficient, which is why the rates that we get are cheaper for a full product with those lenders. So yeah, that cashback option is there, but you're probably going to pay a higher rate to get it.
So the money that you just got back from is going to be spent in higher mortgage payments. So yeah, it's there's always something, right? Nothing's like same with the incentive, right? Nothing's ever for free. They're not just giving you money for free. There's a catch to it. Again, they just want their value to grow, their investment to grow. It's all like everything else, right? So, but no, these are fantastic questions, everybody. You know, you can keep them coming, but we are hitting about 8:30 here. So again, if you guys have any questions, throw a couple more out. If not, we're gonna start winding this down and wrapping it up. I put it in there, but I will one more time here. Book a call with us, see how we can help you out further, buy you that first home. It's fun, it's exciting. That's what we like to do about, you know, when we buy homes together. Love looking at houses, love explaining the process. It's fun. And that's what we like to do. So again, if anything, thank you guys again for being a part of this, taking time out of your evenings. Hopefully you guys have a fantastic summer. Enjoy the nice weather outside. I know I will be for most of the summer. If you see me around, give me a wave, say hi, but I am looking forward to talking to everybody here again at some point down the road. And again, watch your inboxes on probably Friday for your the link to the recording, the booking link, the free book, and buyer's guide that I'm going to send you guys. Again, feel free to reach out at any time if you have any questions. I do want to say that number that has been texting you the updates for the webinar is a webinar program number. You can message it. If I'm logged into my computer on the program, I can respond to those messages. But if you're texting me with something on that number that's urgent, I probably won't see it, especially if I'm out doing showings. So again, if you have any direct questions that are needing answered right now, I'm gonna put it in one more time. That's my direct cell number. So if you need to get a hold of me, text me, call me. That's the easiest way. Otherwise, if you text another number, it'll take me a little bit to get back to you if I log in and check it out. So again, it looks like we're going to wrap this up here. Thank you guys again. Thank you again, Ryan, for being on here answering these questions for everybody. It's fantastic turnout, and I do look forward to talking to everybody again.
Thanks, guys. Have a great night. We look forward to talking to you.
All right, take care, everyone.